if you have not liked and subscribed, don't forget to like and subscribe. Click that bell button. Also, don't forget to follow me in social media, the link in bio. Okay, so today's we're gonna talk about theta. So everything you need to know about theta, what it is and how it impacts and how you should choose an option, right? So we're gonna talk about everything you need to know about theta, and we'll also kind of look into some Tesla calls and how the theta kind of impacts, but you can use the same concept in any. So basically the goal is to make sure you understand how theta works. So if you are new, what is theta? Theta is option is decaying, option sorry I'm sorry, but option is basically decay in value. Every day you hold an option, if it doesn't move, theta eats away some part of the money, right? So you have some premium you paid, and as long as every day the stock is not moving, you are theta is eating away your money, so it decreases. Option is a depreciating asset. So what depreciate is basically theta is the major one. You do have IV and other things, but theta is the major. Of course, if the stock goes down, you will lose the value, but theta is basically, even if the stock remains same, you will lose value. We're going to talk about volatility and everything some other time, but today we're going to focus on just the theta, right? So theta is basically each day you hold, you lose that amount. That's all it is. We can look into some for example, let's say this is Tesla calls, right? So if you go, we're gonna go, maybe we're gonna go 14 only, so that way we don't have to scroll. So theta, right? So let's say if you go, this is 5 February, which is tomorrow, right? So 5 February, if you get, let's say 580 call, you have your theta as 250, right? So stock is right now $4, I mean $6 to $7. So it will cost you anywhere between 680 to 7 bucks, which is $600 to $700. But if you hold, if the stock remains same, you'll be losing $250 just tomorrow. If the stock, the price is same, you'll just lose 250, and as the time goes, you'll probably lose everything if it doesn't move, right? So that's all it is. It has to literally move like $5-6 to make it whatever delta. So here delta is 43. So just to compensate, just to break even, just to remain the same price, it has to move about $6, right? It has to move $6 tomorrow just to break even. So that's what theta is. I think everybody kind of understand theta by now, right? Now, how does theta does not theta is very high. This is very high theta is not always high. If you look at, let's look into March, right? And if you look at the same call, 540, here you can look at theta is 86, right? You saw that there's 250 here, theta is 86. So why theta is less here, and why? Of course the premium is way expensive here. You pay like almost $6,000, but your theta is really small. So probably like depending upon your strategy, what you are doing, but we're gonna kind of look into how theta accelerates when it goes to the expiry. So let's look at this chart. So this is a very nice chart I found online. So this is time remaining until expiration, right? So basically this is 0 day, that's when it's really high. Then you have 30 days, 60 days, 90 days, 120 days, right? Kind of breaking. Now you have the option value, right? Basically option value going down means basically you lose money by the theta. So you can see that theta decay from 120 to 90 days, least impact. It's very slow. If your option has 90 to 120 days, the option is basically theta is very less. Maybe like if you look at the same call, it will be about maybe 20, 30, whatever it is, right? It's very less, very negligible, right? Time decay from 90 to 60 days, between just basically 1 day. So this is 4 months, this is basically 2 to 3 months, right? This is slightly greater. This is a little bit greater than the before, but it's still very nice. I mean, you can see that's very small. It kind of increased a little bit here, and now from 60 days to 30 days, you have kind of pretty decent, right? Greater still, right? Greater still. But look at this. Time decay under 30 days. When you have 30 days, right? When you have 30 days, your time decay is like massive. So look at this, right? When you have 30 days, theta decreases really rapidly. So basically, usually it's good to have, right? So if you get the call, let's say, 45 to 60 days, and if it moves happen within 15 days, great, you still make the delta. Doesn't matter if the delta is 50, you still make, whether you are here, here, doesn't matter, whatever the delta is. If you make the money, you will make. If the stock moves up, you will make money, right? But if you hold it and it doesn't move on your side, you lose money so fast, so quickly, right? Look at that. From almost, look at that, you can even combine those three and this is greater, right? So 30 days, right? Usually within 30 days itself also, if you look at, like, let's say 10 to 15 days, it does not go that rapidly, like probably right around here. The last week, I would say, like last 5 to 10 days, it will go really rapidly, and it increases as it approaches the expiration. What I mean is, let's say you have expiration next week, right? Before theta was small, but now it's gonna start bigger. So yesterday it was maybe 0.30, tomorrow it's gonna be 0.60, tomorrow 0.90. Again, it all depends upon the stock. Different stocks have different theta, so it all depends how volatile it is, how's the premium, and a lot of factor, right? But just the general idea, it accelerates toward the expiration. That's why it's usually not advisable to kind of hold till expiration, because if you sold here, you still get some money of the theta, right? You get that premium jacked up, right? So when you sell it, you make more money. Again, the stock could move really high within that period, then you can move it, right? But if stock doesn't move that high, then you can, if you sell within that 10 to 15 days expiration, you can get good money. This doesn't work for a spread though. For a spread, you need to, because you have the both the legs, so spread you literally have to do make a max, you have to wait till expiration. But if you're just buying a straight call, that's how you look into it, right? So now I'm gonna show some example, right? So yeah, I think I kind of covered, but let's look at some example. This one, February 12th. I mean, we can start from this one, right? So we're gonna look at 850. Here premium is about 700, theta is 250, so you lose 250 if it opens flat. If you go to next week, same call, 850. Look at that, how different it is. Here 250 in a day, here 142 in a day. One of the reason there 250 is cause it's just Friday, it's just tomorrow, that's why it's probably higher. But you can see here it's 140, but it does accelerate as you go. Here, yeah, of course your premium will be really high, but, and similarly if you go to 19, right, 850, your theta is 113. See how it's decreasing, 113. Now 26, 850, it's $1, right? Same thing, it doesn't matter which stock you choose, it's the same thing. APPL, right? PPL, yeah, Apple. I don't know why it wasn't called. Now, yeah, let's look at, so 60 to 90 days. Here let's look at this one, right? Here 140, look at theta, it's just 0.04, right? But here if you go 140, you can see that it's still not high as, but 4 to 12, right? Almost 3 times, right? In terms of percentage, it's 3 times. Of course, Apple is not volatile like Tesla, that's why. You can do one thing is basically you can actually analyze it. So let's say you have a March, and let's say March 40, and buy, you can actually analyze this trade, right click, analyze trade, and you can see that, right? So here you're, look at here, negative 59, you lose negative 59. This is of course 10 contract, but you lose negative 69, right? You can actually change the date. If you change date, see, it's 24, negative 59, 25, it increased to 78, 81, 82, 83, 85, 87, 88, right? It's increasing. So how, that's how it accelerates, right? As it goes to the expiration, it will keep increasing, right? and look at your delta is decreasing and your theta is increasing, 1010, 113. This is here. That's how you look into it, how it's impact. You can actually play around with it and kind of get all the information. Yep, that's it for today. If you have any question or comment, let me know, and don't forget to like and subscribe. Thank you.